My name is Alex Gordon, and I am Director of Sales here at ETF Managers Group. Just a quick compliance aside, I'm a FINRA registered rep, and our prospectus and risk disclosures can be found at our website, ETFM as in manager, G as in group.com. ETFMG is a boutique asset manager with about $7 billion in assets under management, specializing in thematic ETFs. We're equipping investors the tools to directly target industries and themes that have great long-term growth profiles. With the ETF structure, you are able to get concentrated exposure with tax efficiency and without having to take on single stock risk. Some examples of our first market funds include HACK, targeting the cybersecurity industry, IPAY, targeting the mobile payments industry, and AWAY, targeting travel tech. So today we are here to talk about Israeli technology and our ETF that captures the theme Itech, ITEQ is the ticker, in partnership with MBIS and Blue Star. So just a moment, we're going to hear from Joe Levin and Steven Schoenfeld from NB Index Solutions. And just a quick note, for those of you who had been on previous webinars, we're changing the format a little bit. We're going to hear about a 15-minute slide deck presentation from Joe, just to sort of paint the picture to where we're at. And then we're going to get to more of a Q&A interview format containing kind of the most commonly asked questions we get from investors. And by the way, please feel free to use the Q&A function and ask questions, and we will certainly get to them. So just a quick bio about them both. Steven Schoenfeld is the CEO of NB Index Solutions, MBIS, global provider of more than $35 billion in licensed assets, tracking its 150 benchmarks with clients in 18 countries. Previously, he was the founder and CIO of Blue Star Indexes, which launched indexes for global technology stocks, emerging markets, and Israeli equities. Blue Star Big ETech Index is tracked by our ETF, the Blue Star Israel Technology ETF, ITEQ. Joe Levin is the Global Head of Business Development and Strategy at MBIS, and previously he was Partner and Chief Investment Strategist at Blue Star. So with that, turn it over to Joe.
Great. Thanks, Alex. It's a pleasure to be here with all of you today from my home office in San Francisco. As a way of introduction, Blue Star Indexes maintained a family of benchmarks that define aspects of the Israeli capital markets. The Blue Star Israel Global Technology Index, which we nickname Big ETech for short, is a deep dive into the 40% of the Israeli economy broadly defined as technology. Blue Star's indexes, including Big ETech, were acquired last year by NB Index Solutions, with the entire Blue Star team, including Steven and myself, joining suit, where we continue to support our Israel products. Now, what makes Big ETech unique is that it includes Israeli companies regardless of their listing venue. Now, this is important as over 1/3 of the total Israeli free-floating market cap and over 2/3 of tech have gone public on exchanges outside of Tel Aviv, mostly on the New York Stock Exchange, NASDAQ, but also in London. Big ETech is a modified market cap weighted index, which currently has 62 constituents, all of whom have met our strict eligibility criteria, including a full market cap of at least $150 million and rigorous liquidity screens. If you only remember 3 things from our time together, it's 1, Israel is transforming from the startup nation that we all think of to the scale-up nation with an impressive pipeline of IPOs and SPAC mergers. Investing in Itech ensures you gain access to these companies and don't miss out. 2, Itech is not a niche product. Rather, it captures broad, diversified exposure to the startups that have grown up and now are major innovators, developers, and suppliers within the global tech ecosystem. And 3, Israel is in everything we touch, yet if you don't make an active decision to include Israeli tech companies, you are most likely missing them from your portfolio, thus Itech. So without further ado, let's talk about innovation. If there's one word that encapsulates Israel, it's innovation. As a 70-year-old startup, innovation is in Israel's DNA. It's a form of national survival. Through various innovation cycles, Israel has repeatedly been first to market with foundational and core technologies that have enabled new industries and disrupted products and services. from transforming how we farm through modern drip irrigation back in the 60s, to the USB flash memory drive, to pioneering cybersecurity with the first firewall, to instant messaging, autonomous driving, advanced medical technologies. I could go on, and that's just through the start of the 21st century. Israel innovation, it's not by accident. The state of Israel prioritizes research and development through tax incentives and other policies, which today results in the highest ratio of R&D spending to GDP in the developed world. This is often called the innovation intensity scale. And at more than 4.5%, Israel is at the top. But what is even more interesting is that the roughly 2/3 of this massive R&D spending is done by foreign companies inside of Israel, the biggest names in tech. And when you read the list of companies that have significant operational and R&D centers in Israel, it's a virtual who's who. There is a reason IBM became the first official tech company operating in Israel back in 1950, just 2 years after Israel declared independence. There is a reason Intel is the largest employer in Israel with more than 14,000 employees. And there is a reason there are currently over 115 foreign R&D centers throughout the state. These global corporations are looking to mine Israel's biggest natural resource, its talent. And what's being created are these various technology hubs within the state. You can see on the right that Tel Aviv is software focused. Down in the south in Beersheba, it's all about cybersecurity with its close proximity to military bases. The Negev Desert has been completely transformed into a global cybersecurity hub. And in the north, you'll find food, agritech, and water technology. And even Jerusalem, that bedrock of history, is pushing the world forward in autonomous driving, IoT, and 5G. And these technology hubs are also the perfect incubators for startups. Whether it's folks leaving major tech companies to start their own, or the countless stories of post-army entrepreneurship while serving in intelligence and cybersecurity units are akin to getting into Harvard and MIT, or UCLA if you're from my family. Tel Aviv now has the highest number of startups per capita in the world and has been a global leader in startups over the last 2 decades. There is no doubt why Israel earned the nickname that everyone knows, the startup nation. Now, at the beginning, Israeli startups were often strapped for cash and looking for the first good exit opportunity, which led to serial entrepreneurship. Start a company, if it failed, start again. If you sold it, start again. A sort of rinse, wash, repeat. Startup founders would take any viable early exit. Hey, a few $1 million was life-changing. Then the companies and checks started getting bigger. 50 turned into 100, then 300, 500 million. Then Google acquired Waze for $1.1 billion back in 2013, which was an inflection point, inspiring Israelis to aim even higher. And you can see this change in mentality in the numbers. What you're looking at on the chart here are the number of new companies founded in Israel between 2010 and 2020. As you can see, it peaked in 2014, just above 1,400. Then, since then, however, the number of new companies has declined significantly by more than half, with an estimated 520 startups founded last year. So, why is this? Is Israel losing its edge? Well, though this might look concerning on the surface, this actually indicates something very positive about the tech ecosystem and Israel's startup culture. Chief amongst them is that founders, many of whom have already had successful smaller exits, are sticking with their companies longer, have greater financial support from backers and investors, and thereby incentivizing teams to stay together, entire teams to stay together as they scale. And VC private equity is pouring into Israel, enabling this growth. Just look at this chart. You can see that the amount of money being invested in Israeli companies has grown exponentially over the last few years. The Israel Innovation Authority and IVC pegs the 2020 number at between 10.3 and $11.5 billion. But what you do not see on this chart is that through the third quarter of this year in 2021, Israeli startups have raised over 70% more, way off this chart, at $18.9 billion. And this is during a global pandemic with 1 quarter left to go in the year. You can also see that the amount of later stage funding has skyrocketed, further proof that companies are staying private longer and raising more money in search of their unicorn IPO. And as of the first quarter of 2021, I think there are 10 Israeli startups that have reached unicorn status. All of this is leading to an ecosystem where more Israeli tech companies are entering the public markets and are doing so at notable valuations. And this goes back to one of my original points. Israel has officially gone from the startup nation to the scale-up nation. And this is what it looks like. Now on this slide, I've just taken the technology hubs shown earlier and populated them with Israeli public companies operating in the space. Now we've been using some version of this chart for almost a decade. We've had to update it more in the last year than in the previous several because of the constant IPOs. And it's not just the number of new companies, but that these companies, due to their size and market position, are recognizable names, leaders in their respective fields. You know, it used to be that folks would look at this chart and recognize maybe just Checkpoint. But now we have Fiverr, Lemonade, Outbrain, Payoneer, Wix, JFrog, just to name a few. And this is great for Itech. Let me explain why. You can see on this chart during the first half of 2021 alone, 5 new companies were added to the Big ETech index at the most recent rebalancing period. And this doesn't yet include the companies on the right who IPO'd during Q3 or are waiting for their SPAC merger to complete. It gets exciting when you look at these names. I mean, Outbrain, an advertising web recommendation platform, it recently IPO'd at $1.35 billion. Riskify, a behavioral analysis and machine learning SaaS company designed to detect and prevent fraud, valued at more than $3 billion. And Monday.com, a cloud-based platform that allows companies to create their own applications and work management software, valued at $9.2 billion just a week after it IPO'd. Who and where the next IPO will be, only time will tell. But if you own Itech, you'll automatically gain exposure as soon as they go public and meet our liquidity and market cap requirements, taking the guesswork out of it. But it's not just about using Itech to gain access to IPOs. Big ETech constituents are often acquisition targets. And what I'm showing here on this table are some of the exits Big ETech has had between 2017 and 2021. Their 1-year pre-acquisition price, their 1-year jump in performance when the acquisition was announced, and the 1-year return through the acquisition. And of course, the deal value on the right in blue. You'll notice in the chart, Mobileye, which IPO'd in 2014, well, Big ETech included it by the end of that calendar year. It grew organically to be the largest holding in the portfolio, just as it was acquired in March of 2017. And when you look at all of this in total, you can see why we like to say Big ETech is both the entrance and exit index, capturing 2 important inflection points for investors. And as we pull back the lens and look at the Itech portfolio thematically, you can see it's forward-looking and very broad. Just think for a moment. What will the world look like in the next 5, 10, 15 years? How many of you believe big data or artificial intelligence and automation will play a more important role in our lives and in IT enterprise spending? How about cybersecurity, defense, semiconductor manufacturing, autonomous driving? You know, we also provide exposure to sectors not typically found in traditional broad technology indexes, like biotech and medical devices and clean energy and water technology. And the reason for this is that Big ETech was designed to capture a more holistic footprint of Israeli innovation. And when you look at this, as advancements in technology move forward, these are the themes that you want in your portfolio. And this is where Israel is excelling. And it's translated into performance. What you're looking at is you're looking at index returns since the third quarter of 2016. Big Itech annualized over 22% over the last 5 years. As you can see, it bounced back nicely from the lows of March of 2020, leading most broad tech indexes during the recovery. Now, there's been a bit more volatility on the downside in 2021, reflective of the global headwinds facing technology in general, but underlying fundamentals remain even more compelling. And the last point I want to make before turning it back over to Alex is to echo what I said in the very beginning. If you do not make an active decision to include Israel Tech in your portfolio, you're most likely missing it. You're certainly not getting it from the standard global tech benchmarks. And without getting into the nerdy weeds of index construction, let's just say that these companies are hard to capture all in one place. They are distinctly Israeli, listed globally, and truly transforming our future. And that's why we created Big Itech, to allow efficient and easy access to this innovative part of the global tech economy through the ITEQ ETF. And with that, I'll turn it back over to Alex.
Thank you very much, Joe. And we certainly appreciate the update there. Obviously, a lot of exciting things going on. So now we're going to get to the portion, and I see there are a few questions coming through here, and we'll certainly address these as the presentation goes on. But I want to turn it over to Steven for a moment, and just a little bit more about Steven's background. He's the CEO of MV Index Solutions. MVIS is a leader in thematic indexes, hard asset indexes, emerging market and digital asset indexes with more than $35 billion attached. Steven's a 37-year veteran of the investment management industry, having served in senior fiduciary positions at Northern Trust, where he oversaw more than $300 billion in quantitatively managed global equity and fixed income portfolios, as well as BGI BlackRock, where he had managed $70 billion in developed and emerging market stock indices. Previously, led the team at the IFC World Bank, where he developed the first investable emerging market indexes and traded Japanese stock exchange futures on the floor of the Singapore Exchange. Steven's the editor of Active Index Investing, and co-author of the Pacific Rim Futures and Options Market, co-founder as well of ETF.com. His bachelor's in government from Clark, was a Fulbright scholar, and in addition has a master's from Johns Hopkins, the School of Advanced International Studies. So with all that being said, Steven, and we just heard from Joe, and he painted a great picture for us, but would love to hear your thoughts on where we are currently within the Israeli tech sector.
So great to be with you all. And as you got a sense of Joe's excitement, as excited as we felt the Israel Tech thesis was almost 6 years ago when we launched ITEQ together with ETFMG, we're now at probably the most exciting, dramatic, transformational period of change for the Israeli tech ecosystem. In many ways, the vision that we had for launching Big Itech and creating ITEQ has been realized. Israel has evolved from being the startup nation, undisputedly, to also being the scale-up nation. It's not either or, it's both. And this is a seismic shift in company creation and growth that is underway. The kind of cosmic intersection of Israel's entrepreneurial spirit, of the capital market development, of the availability of both early stage and growth capital has all converged to create this perfect environment for Israeli companies to scale up. And we see this in the amount of funding, in the kind of tech talent, in the growth of VCs and how VCs know they need to be in Israel. So it's no secret that Israel's a great place for startups, and we've given you examples. But now, based on our estimates, there's over 200 homegrown VCs in Israel, about 60 corporate or strategic VCs, so companies looking to make acquisitions, and 70 foreign firms, dramatic increase. And also Israel has angel investors, accelerators, private investors. This ecosystem is continuing to develop new companies, but most of these record sums is going for B rounds, C rounds, and growth capital. And growth, mezzanine and growth capital was not a common feature in Israel's startup scene a few years ago. This is proven by the number that Joe just provided. This number came out literally this morning, Israel time. 18 billion September year to date of money going to Israeli tech startups, including for growth capital. But what's really impressive is that 15 billion of it, the vast majority of it, has been in 282 growth rounds. This is the upper level. This is what creates unicorns and decacorns. And so we're talking about 4 billion a quarter going to growth stage. And with that money, companies can hire great talent, they can expand globally, pursue customers all over the world, and grow stronger before their prospective exits, whether it's strategic acquisitions or via IPOs.
Okay, so you mentioned IPOs. Great transition into our next question here. And we've always seen a surge of those, both on the Tel Aviv Stock Exchange as well as globally here. And I know you'll touch on that a little bit more in detail later. But we want to talk about SPACs and how we've obviously seen that as a global trend, both in the US, globally as well. What does this impact had on Israeli companies, and what are we seeing in the future on that?
So I'll start with SPACs, and then I'll give a little big picture on the IPO scene. I won't go into all the reasons why SPACs were so hot late last year, early this year, but they were. But once the SPACs are created, they need to find targets, ideally exciting, growing companies. And so Israeli private companies were ideal for SPACs to target. And suddenly Israeli companies, already profitable, unicorns or bigger, had their choices. Stay private, go public through IPO, on TASE or on NASDAQ or NYSE or SPAC. And so some companies have gone the SPAC route. Some have done so successfully. Some have gone with a little bit of pullback. We've seen that across the SPAC market. But the process of SPAC has brought us great companies that are now publicly traded, such as Taboola, and I'll mention some of the others that came public through SPAC. But what has also happened is you've seen a surge of Israeli companies go public on the NYSE and NASDAQ. There's now 350 billion in market cap of Israeli companies that are listed in the United States. It's never been this high. And at the same time, a major change has happened at the Tel Aviv Stock Exchange. You have seen smaller Israeli companies, tech, as well as all other industries, go public on the TASE. And the TASE has transformed itself. We've talked about this in some of our previous webinars as well. The market cap of TASE is now $1 trillion shekels. For those of you who don't keep the shekel dollar rate handy on your computer screen, that's another 300 billion. So Israel's overall market cap, its weight in the world, has grown substantially over the last year and a half.
Okay.
Just before you shift gears though, as Joe mentioned, Big Itech now has 62 companies. But many of these companies that have gone public, and some have already entered, are prospective entrants into Big Itech and therefore Itech at the next rebalance. This includes major companies like IronSource, SentinelOne, Monday, Taboola, SimilarWeb, Outbrain, etc. So we do expect Big Itech to evolve, representing a bigger universe, representing an even more indispensable cross-section of global tech companies.
So a question that I think revolves a little bit around Israel's politics. Government obviously plays a huge role in support of this tech innovation. Can you talk about what's happening there politically within Israel? Obviously, I think the last time we did one of these, there was somebody else in charge, and how economic and fiscal policy is evolving there as a result.
Absolutely. Actually, the last few webinars we did, there was usually an election. Israel had an unprecedented 4 elections in 2 years with results that were sufficiently inconclusive that they didn't form a stable government. And yet after this last election in March, we've had what by Israeli standards, many people consider a miracle. First of all, the government here we are in October, and the government, which formed, it took till June to form, but it's still in place. But what's truly amazing, Alex, is it is a true broad-based coalition of what you would think is strange bedfellows. You have parties from the center right and from the extreme left, everything in the middle. And for the first time ever in Israel's history, an Arab party is part of the government, and not just any Arab party, an Islamic focused Arab party is serving in the government. And this is something that, of course, sounds fragile, but has served to be stable so far. The current prime minister is Naftali Bennett. He is in a power sharing agreement with Yair Lapid, who would take over as prime minister in 2023, assuming the government lasts. But what you have so far has been stability. What you also have is, for the first time in 2 years, a budget has been passed. Israel was running on a sort of autopilot budget. And you have the same commitment to fiscal responsibility that all the past Israeli governments of the past 10 years have had. Israel was lucky that it went into COVID and the financial crisis with very low debt to GDP. And that allowed Israel to use its strong credit rating to raise substantial sums domestically in Israel from Israeli savers and institutions, and globally, including in Europe, the US, and Asia, in the global debt markets. So it raised money to stimulate the economy. Now it's beginning to improve the debt to GDP ratio again. We just got the IMF estimates for Israel's growth. They raised it to 7.1% for 2021, which is quite impressive. The last estimate was 5.5%. The Bank of Israel similarly is projecting 7% growth for this year, 5.5% growth for next year. Notable is the IMF just lowered its growth for the rest of the world. So Israel's economy is set to outperform in the next year and a half. Last, because you asked about it, is the commitment to tech in the budget. The government has increased its allocation to tech, especially the Innovation Authority, and I'll give you a couple of very cool examples, but it has also made a historic commitment to expand tech education and tech inclusion in parts of Israeli society that have historically not participated in the tech boom. This includes the Orthodox Jewish community and the Israeli Arab community. Both are getting dedicated funding to bring them into the tech success boom. And that's very, it's exciting and it's inspiring. Last just example of what the government does is so much innovation comes from the private sector, but you still need a government to create the enabling environment. So the Israeli Innovation Authority, literally in the last month, has supported 2 tests. One, 2 days ago, Israel started a test of drone delivery. They've cleared airspace and they are now delivering packages, but also blood and medical supplies into designated drop zones. This could not have happened without the government involvement. Second, they have started road-based battery recharging for Israel's second largest bus company. Again, couldn't happen without the Innovation Authority. So the commitment that Israel's always shown from the government to innovation is still very much there.
Right. So you mentioned the term strange bedfellows before, and I think that's a good transition to our next question here. So politically speaking, and again, obviously in the region, we've seen deals and treaties and cross-border partnership that may have not seemed possible 10 to 15 years ago. Can you talk about what the impact of that is moving forward economically for the country, for the companies, and what your thoughts are there?
Yeah, with great pleasure. In fact, even 2 years ago, one could probably not have dreamed that Israel was going to open its pavilion at the Dubai Expo and have open embassies in the United Arab Emirates, Bahrain, and Morocco. And yet all of that happened just over a year ago with the Abraham Accords. Israel has signed normalization treaties with 3 very important countries in the region. It's important to note, as important as these agreements are, and they're very broad agreements, they include trade and tourism and investment, particularly with the UAE and Bahrain. These deals would not have happened without at least the tacit approval of Saudi Arabia, which tells you something about how the tectonic plates are shifting in the Middle East. The Israeli pavilion that just opened 5 days ago at Expo in Dubai, of course it's symbolic, but it's also going to be a catalyst for an acceleration of trade and investment and tourism. What's most important to understand from a political standpoint is the Abraham Accords this spring survived a very important stress test. Israel had a very intense, short, thankfully, but intense battle with Hamas terror in Gaza. And yet the Abraham Accords survived and all the progress continued. That is very symbolic. And that is a reminder of what is motivating these peace treaties. It is an alignment of security interests, first and foremost, but it's also a huge attraction of Israeli tech and innovation. These countries have decided they do not want to miss out on all of Israel's innovation, especially because so much of it is relevant for these countries. Sitting in the desert Gulf, Israeli agritech is incredibly valuable. Israeli desalination technology, incredibly valuable. And speaking of water, the new government, the Bennett-Lapid government, has made major moves in the last few months to strengthen Israel's cold peace with Egypt and Jordan. These are 30-year-old peace treaties, but they were cold. Israel just announced this week a second major sale of water to Jordan. Israel has increased openly relationship with Egypt. And in fact, Egypt Air has started flights to Tel Aviv. It used to fly a blank white airplane named Air Sinai, and no one can even buy a ticket. Now it's flying Egypt Air and you can earn frequent flyer miles. So you can tell that I'm optimistic. And just to be a little more optimistic, I want to leave everyone with a question that I'm asking myself. Who's next? What's next? It took a while, but the Biden administration is now solidly behind the Abraham Accords. It was very close that Israel was going to sign with Oman. So I think Oman could be the next country that Israel normalizes with, but it could be Qatar, and the big one, Saudi Arabia. It may not be this year, but it's definitely around the corner. More tangibly, what does this mean for the participants of this webinar? This regional integration is unleashing a massive amount of investor interest from the Arab world into Israel. Direct investment, joint ventures, partnerships, and especially from the UAE, which has one of the largest sovereign wealth funds in the world. Until a year ago, their benchmark was World X Israel. Now their benchmark includes Israel. So they have started making portfolio investments, strategic investments in Israel, including a major investment in Israel's natural gas fields in the Mediterranean. And so with these investors eager for exposure to Israeli economy, my question to the audience is, shouldn't you have exposure to that as well?
Well, that's all definitely very exciting on multiple levels here. So let's just change gears a little bit. And this is something that I think is certainly top of mind for everybody listening in here, even outside of the Israeli connection. But as it pertains to COVID, we've seen Israel be sort of something of a test case for the world as it pertains to vaccine saturation and things along those lines. But can you speak a little bit about the research coming along, I guess alongside everything going on in Israel on the biotech front and the COVID front? And, as Joe mentioned before, biotech does have a spot in this portfolio here. So you can maybe speak more broadly as to some of the innovation going on there.
Sure. So as you mentioned, Israel led the world in vaccinating. It wasn't an accident. Israel already has a digital health system. So it was very appealing to Pfizer to provide to sell vaccines to Israel because they knew they would get data. So it was not altruism. In fact, Israel paid well over full price for the vaccines, but Pfizer got the data across Israel's population as the vaccines were rolled out. So Israel benefited from the fact that it has already digitized its health sector, and it has a connected economy. This also plays to Israel's medical tech and biotech innovation. Israel is developing a vaccine, but it's not in the front row. But Israel's also developing testing capabilities, masks that automatically kill the virus. Every aspect of biotech and medtech that was connected to the pandemic has been accelerated. But equally important, all the trends that the pandemic accelerated, remote learning, remote work, remote sales, plays to Israel's strength. And with Israel back to normal, Israel's ahead of the world on booster shots. Today, Israel stands as a beacon of innovation, of hope, and energy as we hopefully come out of the pandemic. And Israeli companies were able to pivot very quickly and go remote and continue to grow. You wouldn't have had all of these IPOs if these companies were not able to succeed.
Makes sense. Okay, so as Joe noted in one of his last slides, the Israeli tech stock performance has been incredibly strong over a 5-year period here, both on relative and an absolute basis. Obviously, when you stack it up against some of the other tech indices, it's been an outperformer. However, recently, year to date, last 8 or 9 months or so, it's been somewhat of an underperformer. What do you attribute, I guess, to that? And what do you think for, as far as Itech is concerned and some of the companies there going into next year?
So the chart, as impressive as the chart was, and the 3-year and 5-year and even 10-year performance of the indexes, we've had a sort of correction since the February peak. If you look at charts of global international tech and international equities, you also see many, many peaks around the February, March timeframe. So some of that consolidation is aligned with global markets. Some of it, in my opinion, also has to do with supply. You've seen a lot of these IPOs, so some of the new cash has moved into these companies. But if you think about where we are in the cycle, where Israel's innovation is going to continue to lead, I'm nothing but bullish for the medium and longer term. And as both Joe and I have mentioned, you're going to have significant new entrants already at the next rebalance of ITEQ, which will effectively refresh the portfolio with new names. And you have over 70 Israeli unicorns, private companies with valuation over $1 billion. That's almost 10% of the world's unicorns that will also be moving down the pipeline and broaden this universe. So if you want to be exposed to the innovation that's coming out of Israel, you want to have an allocation to Israeli tech. And and the imperative to do it soon is there, because we believe that both the Arab Gulf institutions are starting to target Israeli tech, but also Israeli institutions, which ironically sat on the sidelines for a very long time, are also targeting Israeli tech. So we think the timing could be very interesting as well. Okay.
All right. Well, we've obviously covered quite a bit on this webinar. And I think the last question here, and it's a perfect segue from the previous one, where would you say Itech fits into a portfolio?
So there's 3 logical places to put an exposure to Israeli tech via Itech into the portfolio. First, if an advisor or an investor has an allocation to tech, which some do, then this is a perfect place, because you're getting, as Joe explained, exposure to tech companies that are not in other tech indexes. Similarly, if you look at developed international markets, whether you use IFA or FTSE ex-US, have much less tech exposure than US or emerging markets. So Itech can be a very good plug in your developed international exposure to increase your tech exposure in developed international equities. Finally, and this is an area that ETFMG knows quite well, you see more and more investors having a dedicated sleeve for thematic or disruptive tech. We think Itech is a perfect component for a disruptive tech portfolio, because you're getting a portfolio of disruptive tech companies that might otherwise not be in other thematic ETFs. And so those would be the 3 locations. And since Joe wants us to remember 3 things, I'll just repeat them. Israel continues to be the startup nation, but it is also now the scale-up nation. Biggie tech is not niche. Itech is an important exposure and can be core exposure to one's tech exposure. And as we just said, it's not going to happen on its own. Investors need to make the active decision to make an allocation to Israeli tech. And therefore, I'm thrilled that so many people participated in this webinar. And we look forward to answering your questions.
Okay, so we've got two, I think, that actually go pretty well hand in hand. Question, and Joe showed a slide before showing where the companies are listed globally here. So can you talk a bit about the indexing process and what defines an Israeli company, since you are taking, again, a worldview on how that kind of goes? And I think secondarily, and I think this pairs well with that, is how does that compare to maybe some other Israeli ETFs that may be out there?
Sure. So Blue Star developed and was the first to develop a true methodology to define an Israeli company. When we were founded in 2011, there was no consensus. In fact, you picked up two Israeli financial newspapers and they would have a different list of Israeli companies listed in the United States. So we came up with rules because that's what nerds like us do. And our rules have been tested and vetted, and we also have an advisory committee that helps us with these rules for 11 years now. So we look at two criteria. If a company is incorporated in Israel, headquartered in Israel, or has at least 50% of revenue, operating assets, or employees in Israel, it's Israeli. So that is simple. But there's also gray areas. And so if a company is listed on the stock exchange in Israel, has a majority of its board of directors or at least two executives, has an R&D center in Israel, or was founded in Israel, if a company has at least two of those criteria, it can also qualify because it has its roots in Israel. So we very clearly say that we take an expansive approach to defining Israeli company. That is what the market wanted from us, and that's what we've done for 11 straight years. And that does distinguish us, whether it's broad Israeli ETFs that cover tech plus, or there's an ETF from ARC that's relatively narrow. They don't go nearly as far or as deep in covering the Israeli universe. In case of the other tech ETF, and we can have a more in-depth dialogue through Alex and ETFMG, we're very happy to have that comparison. But one of the most important distinctions is that ETF is essentially equal weighted, and therefore, in our opinion, it has way too much exposure to small and illiquid stocks, which can distort prices. Second of all, that ETF includes a very significant allocation to pharma, which we don't consider tech. That would be the main differences. Of course, we welcome more detailed questions, and we'll work with our partners at ETFMG to get detailed answers.
Okay. So we have another question that I think pertains to some of the venture capital funding, and I think this would be a good time to mention that, and you have it out or it's coming, the newest quarterly report that that MBIS is putting out. Is that out at the moment?
Coming out next week, the quarterly report. Yeah.
Okay. So that's something that we'll obviously make available on our website to everyone attending today, and we'll remind everybody in the follow-up that is coming. But do you have an idea as to, maybe in a country breakdown, I don't know if you have this in front of you, where some of that venture capital funding is coming from? You mentioned the United States, you mentioned some internally, but do you have some figures there?
So I don't have like down to decimal point figures. Let me start with the headline. 5 or 10 years ago, the vast majority of VC in Israel was either local VC or American with a smattering of Europe. Today, you still have enormous amount of US and European VC, but the local VCs have grown bigger and bigger, even if they have American investors. But you now have substantial VC from Asia, from China, from Singapore, from Korea, both private VC and government-linked VC. And since we mentioned it on the webinar, it's beginning. You're going to have VC from the Gulf sovereign wealth funds. They're already doing their exploration. The investment office of Abu Dhabi has already opened physically in Tel Aviv. So basically the world is now investing, but it's the majority is still US and Israel, but it's becoming much more diversified.
Okay. All right. Don't see too many other questions here, but what I will say is we will make this recording available on our YouTube site. So if you have any clients, other investors, anybody else, anybody listening in that they would like to share this with, we will make this available. And we will also make available the slides that Joe provided with us early as well. So with that, I appreciate everybody attending today. Thank you very much to Steven and Joe. And again, we'll follow up over email. Thank you again.